Like and subscribe to my channel and click the bell icon to get new video updates.
Analysis: Adani'S bonds are a soft target with hard assets. When bond investors ask such existential questions, they tend to take a more nuanced view than their equity peers. On the one hand, a sudden annihilation of more than $100 billion in stock market assets will have some impact on the creditworthiness of an empire, with $20 billion in net debt or triple full-year EBITDA. On the other hand, the conglomerate controls ports, airports, power plants, coal mines, solar farms, roads, electricity and gas distribution, cement plants, cooking oil refineries, grain elevators, and even India's largest apple supply chain. All of these are hard assets, driven by the beating heart of the giant. The port of Mundra in Gujarat, the home state of Adani and Indian Prime Minister Narendra Modi. The two men are said to be close, although the businessman denies having sought or received political favors. If Adani is more likely to float than sink, bondholders are turning to rating agencies, consultants and lawyers. However, the continued adverse developments, it said, are likely to reduce the group's ability to raise capital, to fund tied-up investments, or refinance maturing debt over the next year or two. But after Bloomberg News reported over the weekend that its flagship company, Adani Enterprises Limited, decided to cancel a 10 billion rupee bond issue, the first public sale of debt in the local market, the opportunity is attracting more sophisticated foreign investors to address, rather low at the moment. The infrastructure czar may not go ahead with a proposed $500 million overseas bond offering to refinance some of the $4.5 billion debt it took on last year to support Wholesome Limited's cement business. To buy in India, the Economic Times reported. Ultimately, bondholders will do what they can afford. Political and regulatory temperatures have risen around this saga, with India's opposition parties clamoring for a parliamentary debate, the central bank trying to calm nervousness over local lender involvement, and questions for India's life insurance corporation, and the French TotalEnergies SE, because of their involvement in the equity of the heavily indebted conglomerate. Wealthy individuals can be attracted by attractive returns, but it has become difficult for them to get financing from private banks. That leaves hedge funds as potential knife catchers. Perhaps the group itself recalls some notes to increase confidence. Or Adani could consider selling a few assets to show how good they are. But this latter decision isn't just about financial performance. The former centibillionaire has lost nearly half his personal fortune in 6 days, but has he lost half his ambition too? Showing up in Haifa on perhaps one of the most anxious days of his life, he was kidnapped for ransom in 1998 and holed up in a Mumbai hotel during a fatal terrorist attack in November 2008. He seems to be signaling the opposite.